Ladies and gentlemen, welcome back to the channel. Here in this video, we are going to be going over some news coming out today that negatively impacted Tesla. I have some clarity and some details on this that I want you to know. We will take a look at the option activity, what the short sellers are doing, gearing up for Tesla's earnings. That is just a couple of trading days away. But I have to tell you, Wall Street is asleep at the wheel in terms of what is coming. And I will explain this here in this video, but I think Tesla is going into the 400s soon. Now, again, I'm not a financial advisor, not a financial planner. I make some ridiculous statements sometimes, and half of you do not even understand half of what I say sometimes. But I want to make this as clear and understandable as possible. As you may not know, or may know, Tesla is my largest position, so I do have a financial interest in what I am going to say, and I did place an options trade, a call option on Tesla earnings as well. If you guys want to see that, check that link out down below in the description of this video, just for full transparency's sake. But with that, we have a lot of work to do. Let's get started. Now, ladies and gentlemen, I want to start this video here because it's the most exciting part. So I want to give you the most exciting part up front. And well, you know how I've said like we're waiting on guidance for the robotaxi network? We've already gotten guidance on scalability for the robotaxi network. Wall Street is just asleep at the wheel. They don't remember this. The stock is not reflective of this. What this is Elon Musk said months ago, months before the robotaxi was actually going to launch in Austin, about hundreds of thousands of robotaxis out on the road by late 2026. He has predicted that hundreds of thousands, if not over 1 million Teslas with full self-driving FSD capabilities will be in the US by the end of next year. These are, again, robotaxis, and you can see that video here posted on YouTube. He says, quote, Elon Musk will have hundreds of thousands of full self-driving Teslas by the end of next year. Now, let me tell you right now, we are focused on everything that has to do with Tesla besides the robotaxi. Okay, now by we, like we are focused on the important stuff. But Wall Street, they care about the Model 2. They care about China tariffs with graphite. That was the news today that sent Tesla stock lower. They're worried about Elon's political affiliations. But they are completely asleep at the wheel in terms of what AI is going to do for Tesla. While all these other AI stocks are flying left and right, rightfully so. I am probably the most bullish investor on AI you will ever meet. I believe it's going to be the biggest revolution to human life and for investing that we have seen since at least 2000, the really dawn of the internet at large. Okay, AI is going to be huge. But Wall Street is completely missing the ball on Tesla AI because what I've specialized in over the years is trying to figure out what is accurately priced into a stock. For an example, Tesla deliveries is a great example of this. The consensus number that Wall Street had was 385,000. The stock was priced for like 340,000, maybe 330,000. So what happened? Deliveries came out about 1,000 lower than expected. So technically like a miss, but the stock was pricing in much less. So you actually had a really strong day that day. I believe the stock was up like 5% if I remember, but there was some external like tariff headlines. And I remember saying like the stock would have been up over 10% on the last delivery day if it wasn't for external factors going on in the markets. Now, if Tesla had been ripping higher, everyone was bullish, then missing deliveries by 1,000 may have been seen as really negative. Let's say if the stock was really pricing in like 400,000. So it's impossible to know exactly where pricing is at for any given event or any given thing. Like there's no, numbers, quantifiable way to calculate it, right? It's more on a psychological basis. So when I look at Tesla's stock today, what it trades off of, what people are saying, we are nowhere near the number of robotaxis that we may hear from Elon Musk. If Elon says anything like 100,000 robotaxis out on the road next year, it is game over for the shorts. Tesla stock is going to have a 20% day. Okay? Why? Because it's credible. Even a couple of months ago, when Elon made the comments about 100,000, hundreds of thousands, million robotaxis out on the road next year, it was like 3 months before the robotaxi was actually going to launch. There was still a good group of Wall Street that didn't even know if the robotaxi would launch. Okay? There was still a lot of people that were not even sold on the idea that Tesla was going to have a robotaxi network this year. Well, now we actually have a robotaxi network. Now it's more definitive guidance. Now, even if Elon is massively wrong, I mean, Elon could say we're going to have 100,000 robotaxis out on the road. Even if Wall Street wants to discount that by half or 90%, you're looking at anywhere from 10 to 50,000 robotaxis out on the road next year. The stock, I will tell you, I think is priced for less robotaxis next year than Waymo currently has out on the road, right? Wall Street's not really looking at Tesla right now as a true competitor to Waymo or a true dominant force in robotaxi. How do we know this? We know this because the stock is at $319 per share and not $600. Okay? If Wall Street was really convinced that Tesla was going to dominate the robotaxi market, that Tesla was going to see this rapid scaling of robotaxis, the stock would be dramatically higher than where it is today. There would be an overall bullish feel to Tesla stock. Today, it's like 50-50. Some days look really good, some days don't look as good. That's because Wall Street's not even focused on the right areas. They're focused on the Model 2. They're focused on tariffs. They're focused on Elon's politics. But they're not focused on 100,000 robotaxis as a potential for next year. I really think Wall Street believes Tesla could have like 300 robotaxis out on the road next year. Like, that's where I think Wall Street is priced. That's why I say they're literally asleep at the wheel. Like, they are literally asleep at the wheel. They have no idea of the kind of guidance we are about to get for robotaxi and scalability. Now, one of the biggest hurdles is going to be, as members of the trading community have pointed out, it's the screens, right? How people have to monitor robotaxi rides. That's number one. But number two, it's also going to be from a regulatory perspective. Now, once the regulatory perspective, once we get the approvals to go into different cities, I think the scaling can be really fast. The way that Tesla, I believe, is going to hit potentially 100,000 robotaxis out on the road next year is by allowing customers of Tesla that bought FSD to sign their car up for the robotaxi network. You could go from 100 robotaxis to 1,000 or to 10,000 pretty quickly if you get regulatory approvals in place and you allow people to sign their Teslas up onto that robotaxi network. And that should be a lot higher margin. And that's like nowhere in the thought consensus on Wall Street right now. Like, they're not even thinking about what that could look like for, Tesla's margins. Like, that should be like software like margin. If Tesla takes 30% of the revenue your Tesla produces, you keep 70, like a real estate commission, if you will. Typically, you're going to pay 30 to 40% to the brokerage. You're going to keep the rest. Okay, I was a real estate agent for a while. Some brokerages are like 50-50. That sucks, okay? 30-70 is the best. Tesla gets 30% of all robotaxi rides on its network. All it has to do is maintain its network, regulatory approvals. They're probably going to spin, FSD advancements and, additional chips into some of those calculations as well when they try to calculate margins. But it's going to be a cash cow. It shouldn't take too long to be profitable, in my view, once you start to scale into the thousands. Okay? It's something Wall Street's not even thinking about. And that is one reason I did make an upside trade on Tesla. Again, if you guys want to check that out, link down below in the description of this video. Now, I will tell you, we trade options, we trade earnings. That's where I do most of my trading. I don't like to overtrade. That's like the death of accounts, is when you start trading everything. I like to be selective with the opportunities that I trade. Like yesterday, during the whole firing Powell debacle, I bought IWM calls. You can actually see the history of that trade here. Bought 10 of them, sold 5 of them for $190, and then sold another 5 of them today for $270. So made a couple $100 on this trade. We do trades like that from time to time. Again, I like to snipe opportunities. But what we're really focused on over there is finding value in small caps. And it's kind of like what we're doing with Tesla, or what I'm saying with Tesla, okay? When there's small cap opportunities, like one name in particular is a pure AI play. It's 100% AI in a massive total addressable market. If you look at something like Nebius, Nebius is trading at 3 or 4 times that small cap's valuation. They're both growing at hundreds of percents a year. Okay, both companies. But one, like Nebius, is now well known by the markets. When I bought Nebius at 17, it was not, and that was part of the trade is, oh my gosh, look at this company. It's doing something great. Wall Street doesn't realize yet. Now they're catching on. The stock's in the 50s, okay? This other stock is small cap, so hedge funds, institutions really can't own it too much, and it doesn't have a large retail investor base, okay? That will change. So we're getting in at the ground floor of AI opportunities, energy opportunities, robotic opportunities, and biopharma opportunities. I think these are really the main pillars of the next decade that you want to be invested in. We're going out, putting in the work, excluding the bad companies, investing in the good ones. Check that link out down below in the description of this video if you want to come join the greatest community there has ever been in finance history. Like, nobody else is doing this, striving for these outsized returns while putting in the work to find them, okay? That is something special. And shout out to all of you guys in the group. So back to what I was saying about Tesla and Tesla earnings. You know, the next couple of days heading into the 23rd, which Tesla's going to report. So we have tomorrow, Friday, we have Monday, we have Tuesday, I believe Wednesday is going to be the 23rd, right? Yeah, Wednesday. So that anything can happen over the next couple of days. But I do think after Tesla earnings, we could see like a 20% rally in the stock. Okay, we could see a pretty damn aggressive move higher. It wouldn't surprise me if that happens over the next couple of days leading into Tesla earnings. Typically, big money tends to like get a little bit of insider information before the public does. So we'll have to wait and see on that. And I think very soon Tesla stock could be in the 400s again. I mean, the stock should be like in the 600s right now if Wall Street really understood the next 12, 24 months for the robotaxi network, right? If they really understood what was coming next, the stock would be much higher than where it is today. I don't know if they're going to all of a sudden open their eyes after Tesla earnings, but I think some of them are. I think some people are going to realize Elon may not be just talking crap when he says there could be 100,000 robotaxis out on the road next year. I think some people are going to have to really face the music and reconsider what they're doing with Tesla. Get allocated to Tesla, number one, because a lot of firms are underweight Tesla, and start to cover on some of those short positions. There's a lot of people that are short in Tesla that are outright just bearish on Tesla. And I think some of that is going to flip after Tesla earnings. Again, you don't need everyone to love Tesla. When everyone loves Tesla, it'll be over $1,000 a share, right? It'll just keep going and going and going. But as you get more people that are haters, that don't understand Tesla, that start to flip and say, wow, this could be like a big AI company with software-like margins in the robotaxi business, you're going to start to see that incremental flip. And I think that begins after this earnings. Now, here in the news today, the U.S. is set to impose 93.5% tariffs on key battery materials from China. The U.S. Commerce Department imposed preliminary anti-dumping duties of 93.5% on Chinese imports of graphite after concluding the materials had been unfairly subsidized. From my understanding, from what I can gather here, it doesn't look like Tesla is going to be too affected from this. Tesla tries to source local anyways. Not a lot of Tesla vehicles sold in the US are getting, battery materials from China, right? But it will affect Tesla to some degree, but it's going to affect Tesla's competition a lot more. Like GM, they're going to be hit much harder on this. But it's funny because Ford and GM, did they react to this? A little bit, but not really. Even to further my point, on Kalshi, the betting market, here's a bet. Will Tesla's robotaxi be offered in California this year? It's only a 15% chance. Like, nobody has high hopes from a Wall Street perspective on Tesla's scaling of robotaxi, which that's going to be the shocking part on Tesla earnings. It's going to be that. We're going to get confirmation the Model 2 is still coming this year. Probably the Model 3 Plus, the Model YL is probably coming as well. But it's going to be the robotaxi, the guidance for scaling that really shocks people. Tesla has announced its first virtual power plant program in the UK. They say, quote, you can get paid to share your energy, store excess energy in your Powerwall, and sell it back to the grid. You're making money, and the community is powered by clean energy. Tesla's diner is set to open soon. They will offer burgers, fries, chicken wings, hot dogs, hand-spun milkshakes, and more. Tesla's patent for manufacturing paint-free vehicle body panels has just been revealed. Now, Tesla is developing a new process so they don't have to paint the Cybercab. Okay, so this is directly correlating to what should be Cybercab production by the end of this year. Now, the Tesla North America X account says, attention Americans, up to $10,000 in interest on your auto loan is now deductible. You can stack this with the $7,500 federal tax credit. Combined with zero gas and almost no maintenance, a Tesla saves you more money in the long run too. Now, Netflix, your first of your big tech stocks, if you will, reported earnings today in after hours. And I think this is an example of really what I'm talking about with Tesla as well. Netflix came out, they beat on everything, clean, beat, raise, like typical Netflix earnings, okay? Or typical big tech earnings in general. But what happened? The stock went up and then it came right back down because it was already priced in, right? Because the stock had already rallied a lot, was near all-time highs. Like, there wasn't a big bullish surprise. So you kind of didn't get much of a reaction. Again, parallel that to Tesla. Tesla is down quite a bit from the high that it hit at $488. It's still down from $488 till today, over 34% from its, previous all-time high. Like, you're not priced for perfection in Tesla. Now, tomorrow morning, we are going to have some earnings as well, still with Huntington, 3M, Regions, Truist, SLB, American Express, Charles Schwab, Ally, Comerica, and Autoliv. American Express is really the one that I care about here because obviously credit card usage. Are people, defaulting more? Are they not paying their bills on time as often as they perhaps were before? Or is things fine? If American Express says things are fine, then that's a little bit of a sigh of relief, if you will. Now, tomorrow, for economic data, we do have building permits and housing starts. This doesn't matter much to markets, but, it's worth paying attention to if there is like a big slowdown in real estate. Like, some people are going to, look at that and care about that, but stocks generally are not going to move on that. Michigan consumer sentiment will be important. 5-year inflation expectations and 1-year inflation expectations will be critical. 5-year inflation expectations are expected to hold steady at 4%, and 1-year inflation expectations are expected to actually fall from 5% down to 4.7%. So the bigger the drop, the better the reaction likely is in markets. You also have current conditions and consumer expectations. The higher, the better there as well. So Michigan consumer sentiment, for a long time was just kind of ignored. It wasn't really important. Like stocks didn't move on it. But nowadays, it does seem to be more important with those inflation expectations. Ladies and gentlemen, let me know your thoughts on all of this down below in the comment section. Just to wrap up this video, option activity today definitely ramped up into the close. You had 127 different trades from hedge funds and institutions, totaling $606 million with a positive order value of 58%. So that does look okay. You have 2.81% short interest of free float, $25.34 billion sold short in Tesla, totaling about 79 million shares. And again, about 29,000 shares today on net were covered by hedge funds and institutions. But if we get an Elon that says, 100,000 robotaxis next year, up to 1 million, again, that's not going to convince everyone that Elon is telling the truth. But there's going to be some people that say, well, Tesla, they have this robotaxi service. Can they get, can they scale a lot faster than maybe we think? There's going to be a good percentage of investors that take Elon at his word or even heavily discount it. Like if Elon says 1 million robotaxis next year in the best possible scenario, discount that by 90%. And you're still looking at 100,000. Discount that by 95%, and you're at 50,000 robotaxis. Like Wall Street is far off of the kind of guidance that we're going to get for next year, and that is why I think Tesla stock is about to explode to the upside. Ladies and gentlemen, hit that like button and subscribe to the channel if you have not done so already. Check out that link down below in the description of this video if you have not done so already. Again, that is hands down the most unique community in the world. We put in the work. I put in the work. Many others put in the work to go find those opportunities, and that's what we're doing. Okay, it's like the diamond mine in Arkansas, right? You literally get out there and sift through dirt, and it's just terrible stocks. You're just sifting through all this dirt. Then you finally find a diamond, and all that time and hard work was worth it. And if you're a nerd, you love to sift through the dirt, the bullshit companies, and find the good ones anyways, which I guess is a blessing on my part. So nonetheless, check it out if you guys would like to. Have a great rest of your day, and I will see you in the next one.